It was really cool.
Yeah. And also, a little surprise. I'm going to be giving away $100 in crypto once we hit 100 subscribers. So
Dear
that means we're
God.
like eight people away.
Dear God. What the fuck, dude?
Yeah, I didn't even tell you that.
You didn't tell me that.
Yeah.
This is live. You messaged me about it the other day, but we didn't get to talk about it.
Yeah, I know. And I actually wanted to start it at the beginning of
So
this
we'll put
video.
this in at the beginning.
Yeah.
Yeah, welcome to Triple Point Charts Podcast.
Yeah.
Kenny's giving $100 away in crypto at 100 subscribers.
So if you can see, we're at like 91, 92 down here. So if you subscribe in the next, day, you had a chance at getting that $100 in crypto.
Wow.
All
right. I think I'm fucking ready.
I'm not gonna lie, this drive sucked this last time.
Yeah, it did. It wasn't too bad for me.
Oh, of course it wasn't. What? 5 minutes?
No, it was double today because we had to come here and come back.
So it was pretty bad for you.
Yeah. 50% worse.
50%? No, 100% worse.
100% worse, yeah.
Yeah. Do you even trade, bro?
No. What's up? What's up, cool cats and kittens?
Cool cats and kittens?
Yeah.
Or, as I like to say, my furry friends.
Yeah. You know what Cool Cats and Kittens is from?
Oh, man. Oh, yeah. Carol Baskin.
Carol friggin' Baskin.
You know what's funny is I have a friend coming to visit for my son's first birthday.
Mm-hmm.
And I've made it clear to Caitlin that we're going to go to Gatorland when she comes. Because it's a Florida thing. Like,
I've never been.
You've never been? Yes. So many Floridians have never been to Gatorland or Gatorama or any of those places. But if you're visiting Florida,
Yeah.
isn't that something you should do?
Yeah. I get asked about it all the time.
Yeah, exactly. And so I think that's just with me and like, because I left Florida, moved to California, and like moved around so much, and I would always kind of go do those touristy things there. That now that I moved back to Florida, I'm aware like, oh, these are things that people visiting should see, and say, man, Florida's fucking wild.
Yeah, it is wild. I don't know. It's like we live in an area where there's alligators. You don't really have alligators where you're at, do you?
I would say Fort Myers does. I mean, the ocean's not too far away, but you still have. There's swampland, like pretty much. We're not too far. I think we're like an hour away from the Everglades. And,
oh well, then you got it. That's walking distance for an alligator.
Yeah, but I'm also like in a much bigger city than you are.
Yeah.
Because in Sebring, you'll find them in any little puddle.
Yeah, for real.
You know?
Yeah, I've got 3 at the house.
Oh, really? Oh.
I
know you're right by the lake. So.
Yeah, well, I did the other day. It's supposed to be like an area that's kept up by the city. And I'm actually in the designated swimming area, and I look up, and I'm like, what is that? There's an alligator just chilling.
Was this at Lake Jackson?
Yes.
Oh, yeah. Apparently, I think there's like a ton of alligators in there.
Really? I've seen a ton of moccasins in there. Yeah.
That scares me more.
Yeah, me too.
Yeah.
They've when we used to kayak fish, they will follow your fucking fish in and try to eat your fish. Like we've had them hooked onto our fish as we're trying to pull them up to the kayak.
Oh man.
Yeah, it's insane.
So they see you in a boat and they're like, "All right, let's get in this water for a free meal."
Yep. Yeah, I remember one time my dad went fishing with me, and this was in this was at Arbuckle Creek, so this is like a very small area, and there was one curled up by the boat ramp, and my dad was like, "There's no way that's real." I'm like, "Dad, who would leave a fake fucking snake out here? You'd have to boat out here to put a fake snake." And so his idea was to poke it with the oar.
Oh no.
Yeah, and he did, and it like started to crawl up the oar.
Yep.
Yeah.
That's why I said, "Oh no."
Yeah, it was crazy, dude. But welcome everyone. Thank you for tuning in. This is episode 6.
Yeah, episode 6.
Episode 6. We're trucking right along. So today's episode is going to be potentially a little bit more informative than a few of the other ones. We're going to be talking about what's the title of this one? What are you going to put as the title?
How to make the best furry costume. Yeah. No. More so. I think today's episode's more so because I mean, as you know, Samuel's been doing this for a few years, but me myself, I'm just now getting into trading and learning about the stock market, and so I thought it'd be good information out there to do an episode on like different things to study so you can get more knowledgeable on the market and reading charts and making accurate predictions on your trades. So I was like, hey, let's do like a candlestick and a few indicators and just overall, different things to look out for when you begin your trading and investment journey.
Yeah, that's a long intro. That's a long
explanation.
Title.
Oh yeah, that is a long title. I went off on it, but yeah, we'll figure out it'll probably just be like
maybe I don't know, maybe what to study when you want to learn. Yeah, that's what that was the original message.
I don't know. I'll figure it out. The YouTube algorithm will give it to me.
Hell yeah, amen, amen, algo. But yeah, so today we're going to be going over the history of candlesticks. Did you have something to say?
I was going to say this. I've recently learned on my YouTube algorithm journey that if you mention other YouTubers like Stephen Graham or like more popular, apparently the algorithm catches on to the fact that you're mentioning Stephen Graham.
Mr. Beast, Mr. Beast, Mr. Beast, Mr. Beast.
Well, I mean, probably not. Let's make a video like how he did Logan Paul 100,000 times. Did you know that?
Oh yeah, I watched the documentary. Yeah, he's great. I love Mr. Beast.
He's kind of crazy, but in a good way.
Yeah,
and very like motivated. Hey, I'm going to be a YouTuber. Yeah, kind of way.
Yeah,
and
since we want to plug in some algorithmic banter, why don't we talk about Trillionaire Mindset podcast and how they totally fucking shouts out to you guys. You're good people, I guess. I do follow both of you on Twitter. I don't expect you to follow me back. I have like 18 followers. But Trillionaire Mindset podcast, their last episode, it was like fucking eerily similar to our last podcast episode. They talked about buying a whole Bitcoin, talked about mental health. They did a bit about being sponsored by water in the beginning. Just so we're either getting watched or we're all on the same wavelength. And in the church, they say that's the spirit talking to the community. So hopefully it's just the spirit of trading is running through our bones, and we're all synced in.
Yeah. If we're all in the same, like how Christians are, there's Pentecostals, there's Baptists. Like if they were like what we would be. What denomination would they be? If we're all on the same wavelength, I just want to take.
We'd probably be Baptist.
Yeah, we probably would be.
Yeah, because we cuss a lot more than them. I don't know. On their last episode, they were talking foul.
Yeah,
all this kind of shit.
Yeah, maybe they would be Pentecostals.
Yeah, probably.
Yeah,
because they have, they're Yeah, I don't want to get into it too much, but yeah, I think we'd be Baptist because we'd be doing shit however we want to do it.
Yeah,
and they kind of stick to a program.
I wonder what because it seems like Baptist, it's a Southern thing.
Well,
right?
It can be like there's a whole cult of Baptists called Southern Baptist.
Yeah, but then I wonder like up north, what is their primary denomination? I wonder which one's the most wealthy. Which denomination is the most wealthy?
I don't know.
I would love to see. I wonder if anybody's ever done a deep dive on the finances of the different denominations and which one holds more wealth.
I don't. Probably Baptist because they're the ones.
That sounds like a fucking. Let's smoke a little bit of this weed and just sit back.
Let's
and
hit some
enjoy the ride.
DMT and talk to the denominational gods.
No, I'm just saying conspiracy theorist type.
I would
Video.
probably Baptist because they have huge colleges.
Oh yeah,
But so does Church of God, and that's like a very common up north thing is Church of God. They have colleges as well.
yeah.
Like Lee University is a huge college. That's I believe a Church of God college.
Yeah, that's so weird.
It's super weird. I wonder, do they pay taxes on any of that?
I mean, if school,
Yeah.
I don't.
Well-
I would imagine probably not. I
Yeah,
would imagine
that's
they'd
like a double no tax
Yeah,
Christian school.
yeah. I would imagine they probably don't. They
They
Man.
probably get back taxes. They probably get a portion of our back taxes.
this isn't just a YouTube channel. This is a church.
This is a church. This is a family of believers
Yeah, and we're here
for you.
for you, and just know that we're not going to get taxed on it because we're a church,
Dude.
And
That's what Kanye did.
really,
Yes.
man, I don't follow Kanye like that.
Yeah. He's like Sunday Service. You ever heard of that?
Oh,
Yeah. He's got his own like nonprofit organization that he runs.
that he profits off of.
You can. That's not necessarily what a nonprofit means. You could still make profit.
No, I know.
Yeah, but yeah, he's a church, man. Like fully.
Yeah, nice.
So good. Yeah. I mean,
Do you go to Sunday service?
never been. I've got some friends that have been.
Oh, really?
Yep.
Is it actually like a Sunday service?
Yeah.
Where at in
It's all
Wyoming?
over. No, it's they have it in different places.
Oh, really?
Yeah.
So does he travel to different places?
Yep.
Is it really to see Kanye? Is that the whole?
Hell yeah. They sell merch there, bro. They sell Yeezy merch there. Yeah.
Is it Yeezy on a?
It's-
Did they sell Yeezy on a cross?
They sell Sunday Service merch.
Yeah, but I wonder what that merch looks like.
Let's It's
Let's take a look.
It's so easy. It's so easy to figure this shit out.
That's so crazy.
Yeah, and it is not
Like the fifth one down. Oh, merch. Yeah.
it's not cheap.
It's not.
No. These are resales, but I wish we could see. Fuck it, let's just go to eBay.
Or that's Etsy, but same deal.
Yeah, whatever. This is probably fake then if it's on Etsy.
I mean, somebody could have bought it up and then just started their own store.
But $40 t-shirt, $70 sweatpants.
Okay, so it's not like Gucci.
I thought it was more.
Yeah.
I thought it was like $200 a shirt. In which you got to think.
I mean, some of this could be fake too.
Yeah.
You're right.
Trust God.
Oh man, that's so cheap to make.
Oh, dude. We've been down that road before. You and I. When it comes to the merch game.
Yeah.
Look at that. Kanye West hat, $300.
Oh man, I gotta have that.
Sunday Service, $205.
I gotta have it.
$1,400 for that. Good for him, man.
Yeah, that's good. I'm happy for him.
Me too.
I wonder how much of that is going to God.
All of it.
All of it?
He is God.
Oh, that's true.
He is God, dude.
That is true. I forgot about that.
But yeah, so shouts out to anybody that can evade taxes legally. I'm down with that, dude.
Yeah. Yeah, I have a few friends that own businesses, and literally they mentioned their business at dinner once, and they're like, "Oh, this is a write-off."
Yeah.
And I'm like, I'm not quite sure that's how it's supposed to work, but okay.
Yeah, but that's how it works. I remember going to Ruth Chris one time, and it was before I knew anything, but I was like, dang, I got invited there. It was for a graduation party, and it was a huge, 15 of us or so, and the guy that was paying for the dinner, his daughter was graduating, and he paid for everything at Ruth Chris, and this is like a nice steakhouse, rather expensive, and it was thousands of dollars for this meal, and I remember at the very end he was like, "Hey, I need a receipt and a copy of the receipt and all this kind of stuff," and it hit me all at once. I'm like,
he's writing that.
He's writing this off.
Yeah.
He's going hard for his daughter, but this is this is tax fraud for sure.
Yeah,
You know?
no, for sure.
But I got some good steak. I got some aged whiskey that was like $90 a drink.
Oh, nice.
Yeah, all for free.
Yeah.
All off the hard working backs of you people out there listening. So thank you so much for your contributions to my alcoholism.
I mean, it wasn't. He also, how much of that is he really, like getting a break on?
Probably not a lot.
Not a
But
lot.
he was
of
like
it.
uber rich, so I don't think he really cared that much.
I mean, yeah, but like the saying goes, penny saved is a penny earned.
Penny saves a penny earned, baby. And speaking of penny saving and penny earning, let me teach you. Let's go ahead and break this on down today. Today we're going to talk about. Oh, I don't need to bring up Discord. Oh, let me close out Discord. Sorry about that, everybody. So today we're going to be talking about what to study when you want to learn. There's a few things that we're going to go over. First off, history of candlesticks. Second is going to be what is a candle. Next is candlestick patterns, followed up by price structure, then indicators, and then we're going to cap it off with a message from Pastor Brenny on risk management. So strap in, strap on, get ready to have some fun. Here we go. So what to study when you want to learn? So if you're new to trading and you've heard the very common phrase, just study. What do you study? Where do you start, Kenny? Somebody tells you just fucking research, bro. Where do you? Is that your phone?
It's not a big deal either way.
Not a big deal either way. So we were just kicking it off. We were just starting with our explanation for the podcast, and then we heard a freaking alarm here in the office. And I don't have. Well, I'm not going to say I don't have an alarm system because that's a security threat. But another building below us had an alarm get tripped, so we had to stop for a moment. But now we're back, and we want to explain what we're going to be talking about today. So, what to study when you want to learn. So people, they really have this narrative that, it's easy to learn this stuff. You just got to dig in, figure out, what works for you. But where do you start? Where do you, when you want to start your journey, what do you look up? Do you look up how to trade?
I look up. I get on YouTube, I guess, and I just kind of like how to get started in trading, or something like that. But then, I mean, I'm kind of like in a place where I understand a lot of the aspects of trading. It's just like there's so much information out there that it gets so kind of like overwhelming that I'm like, I don't know what to study first. And what I understand foundationally, I should understand, like, support and resistance. But then outside of that, it kind of gets a little more like, all right, which direction should I go after that?
Yeah, like who should I listen to? Who should I subscribe to? Those kind of things,
Yeah, that, and just, I guess, just in general, just learning about like the different indicators and why I should learn the indicators. And
okay, so if you are going to be trading, then we're going to go over pretty much the most important aspects of trading, at least in my opinion. So we are going to be referencing a book that I look back on quite often. It's called the the Candlestick Trading Bible, I believe is the full name. I want to get that for you though. That's going to be down in the description below. I've found a PDF. Yeah, the Candlestick Trading Bible. Candlestick Trading Bible. So we got a PDF here that you can download, and you can see what we're talking about. But this is a very good resource to go over. So what we're going to be going over is the history of candlesticks. What is a candle? Candlestick patterns, price structure, indicators, and risk management. Risk management is going to be handled by our buddy Pastor Brenny. He's going to come on and he's going to share a word with you on risk management. So history of candlesticks. So when you open up a chart, when you open up a trading chart, you see these red and green notations on a screen, and those are somehow, those tell you what the price is, where it's going, what the price is doing. But how do you read it? What's the issue there? So first off, we're going to go over, let's see here, pages 8 and 9 is a great tool, or great pages to start on. That's always a good sound when you open up Trading View and you got a indicator, or you got alerts going off. All right, so candlesticks. Candlesticks have been around a lot longer than anything similar in the Western world. The Japanese were looking at charts as far back as the 17th century, whereas the earliest known charts in the U.S. appeared to be in the late 19th century. Rice trading had been established in Japan in 1654 with gold, silver, and rapeseed oil following soon after. Right. I don't know what rapeseed is. Yeah. Rice markets dominated Japan at this time, and the commodity became, it seems, more important than hard currency. Manusha Hama? Does that sound right? AKA none of it sounds good. A Japanese rice trader born in the early 1700s is widely credited as being one of the early exponents of trading price action. Okay, so let's keep on going. Candlesticks. Why are candlesticks? Candlesticks are important to your trading analysis because it is considered as a visual representation of what is going on in the market. By looking at a candlestick, we can get valuable information about the open, high, low, and close of price, which will give us an idea about the price movement. Okay, so boom. Let's go here. We'll go on the 1-day chart. We're going to make this thingy big. So this is one of my TQQQ charts. So this is a Japanese candlestick chart. Everybody's probably seen it. At least at this point, you probably have. If you haven't, then this is what it is. So each one of these represents a specific time, and it tells you what the price opened at and closed at during that time frame. So this time frame is 1 day. So each red and green candle represent a span of 1 day. No matter how far it dips down or goes up, that's 1 day in the candle. Let's look here. Where are we at? Okay, so Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. So let's say that this candlestick is the same on our trading view. This is a 1 day candle, so we're going to say that this is a 1 day candle. On a traditional chart, white is bullish, I want to say. Oh, well, it would be opens at the bottom. Okay, so yeah, white is bullish, black is bearish. But in this case, most today, red is bearish and green is bullish.
Yeah.
All right, here we go. So this is a candlestick. It's going to tell you everything about it. So the middle part of the candle is where the price has moved. This is called the real body. Mm-hmm. On a bullish candle, so a green candle, the bottom is your open and the top is your close. So I'll show here. We got the open where it opened right here at the price of $27.05 on the day. And at the end of the day, it closed at the very top of the candle at $32.19. Now, we do have right here this little stick that comes up above, which normally is called a wick. In the Candlestick Bible, they call it a shadow. So the shadow shows you where the price had moved to during that time frame. So the price went all the way up here, and the price also went all the way down here. So this is the lower shadow. This is the upper shadow. It just shows that's where it pushed up to and then pulled back from. So
what you're saying is kind of like in 1 day it pushed up to that, but then it got pushed back down a little.
Well, it closed on a bullish. The top of the candle is where it ended at.
Yeah, so it still closed in the grain.
Yes.
It's just okay. I see.
Yep.
So the wick is just showing you everything that happened in between.
Correct.
Kind of.
Yep.
Okay.
Yeah, in that time frame.
Yeah.
Yeah. So so then you have the inverse on the bearish candle, which meaning the price is going down. It opens at the top and it closes at the bottom. It's got the same long shadow, long wick down. Okay, so I missed this part. So the shadow or the wick on the bottom is showing you the very low of the price during that time frame. Yeah. And then the shadow or the wick at the very top is showing you the highest price during that day.
Yeah. So anything that happens in between the open and close doesn't really matter because it closed below it or above it.
Correct. Yeah.
Depending on if it's a bullish or bearish candle.
Yep. Exactly. Yeah. So that's now there is a lot of information inside of the wicks, the real bodies. I'm just wanting to go over, what are you looking at? Because wicks mean everything when it comes to, actively trading, like intraday, things like that. Wicks give you a lot of information on, if the price on let's say you have a green candle with a really long top wick. That means that the price did go very high, but it also pulled back down quite a bit.
Yeah.
So that can, maybe indicate that that's not as strong as a candle. Let's see if I can find an example here. Like this one, for instance. So we had a green candle here. It opened at 38.32, and it closed at 39.70. But it went all the way up to 42. So it's like, dang, like we went all the way. We went up a couple bucks, but we also retraced down a couple bucks. So that right there could have told you that the following days we might start bleeding, because you had a big green day after a bunch of red days, but that green day really wasn't doing shit because it was just, it opened up. It opened up good, strong, but then clearly couldn't hold for that day. And the next day the next few days we had sell-offs.
I mean, which kind of makes sense when you look at, looking at this chart right here, you see a lot of red. Well, right now the sentiment is we're headed towards recession, and so I'm seeing a lot of red. Anytime you get a green day, like it's kind of like why?
Yeah.
Yeah. So it makes sense that it follows with some bleeding
for sure.
Yeah. I know it's the market kind of being hopeful, I guess.
Yeah.
Because you still have to trade. Like it doesn't matter. That's the sentiment. Like the market's still gonna move, whether you're in it or not. And that's the thing about it too, is you can't just you can choose to sit on the sideline and wait for a bottom, but like everyone says, nobody knows the bottom for
sure.
one, and two, the market's still going to keep going. So if it rallies up, those are lost gains you missed out on, and if it rallies down, pat yourself on the back. You may have saved a couple bucks, but even then, you can always short it going down.
Hell yeah.
And make money off of it. And that's how these markets work nowadays. It's not even about whether if we're in a bull market or bear market. It's you need to adjust your trading strategy to the market.
For sure.
So if it's a bear market, if you feel comfortable shorting something that you believe is overvalued, it's kind of like your responsibility to short it because that something's overvalued. You're calling bullshit on this, pretty much. So
explain to me what a candle is. I think you got it now. Well, I think you already had it. So a bearish candle, it opens at the bottom, closes at the top. Bullish. Bullish.
Yeah.
I'm looking at it too.
Yeah.
Bullish candle opens at the bottom, closes at the top.
Yeah.
And it so all a candle is telling you what the price was doing during that specific time frame.
Yeah.
In this case, it's a day.
So like the last candle, for example, it opened at 24.28.
Yep.
And then by 1 o'clock, go to the top of the wick. at 1 o'clock it was probably at 27.74, but then the bears came in and pushed the price down to close at 27.11.
Yep,
Yeah.
exactly. Yep,
Yeah.
and that was that right there tells you the entire day's price movement.
Yeah.
And that's all a candle is. It's just explaining to you what the price did during that time frame.
Yeah.
Beautiful.
And I mean, it's not by the, like, obviously I just made up a number when I said 1 o'clock, 2 o'clock.
Yeah.
It could have ran up to that top of the wick by 10 a.m. and then gotten eaten down.
Yeah.
You know, and that, if you want to know more on that, then you would go to like the 15-minute chart, and then you could see at what time frames did it run up to 27.11 and then got beat back down a little. You know?
Did you know that the guy that created the candlestick patterns, or the Japanese candlestick pattern, or Japanese candlestick charts, is known as, his nickname is the God of Markets?
I didn't know that.
Yeah. Yeah, he traded, well, he was 1724 to 1803.
Yeah. What's funny is the fact that somebody in Japan invented candlesticks, and it seemed, I don't know a lot about macro, obviously. I'm just a dummy trying to learn. It seems like Japan, like they had the crash in the 80s that they still haven't recovered from.
Mm-hmm.
And I think even right now, there's a lot of eyes on Japan and their currency and whether it's going to collapse or not. And they're just, it's funny that the guy who made such a, discovered such a, what's the word? Something to read the charts.
Yeah.
His country's just so terrible at markets. I don't know.
That's because they peaked too early, bro.
I think a lot of it also has to do with population growth and size and things like that.
Yeah.
Which, I mean, I think we're gonna because I was talking to not to go off on a tangent, but I was talking to my wife, and she was asking me, "Do you think the markets are like the housing market is actually gonna collapse?" And I was like, "It's not a matter of if, it's when." And she's like, "What makes you so confident?" I was like, "Well, think about it. All right, do me a favor. Google baby boomers.
Baby boomers.
Population.
Okay. What's a baby boomer?
Baby boomers born. It's a person who was born after World War II up until, I believe, the 80s. Actually, that's a really large gap. But
how big is the baby boomer population in the U.S.? Baby boomers were the largest living adult population until 2019, according to the U.S. Census Bureau. U.S. boomers will remain the second largest population group in 2022, comprised of 69.6 million people, ages 58 through 76.
So that's 60. So that's almost that's almost a third of our population. But either way, outside of that is how many of these baby boomers own homes? Right. The vast majority of them do.
Jeez. Yeah, we're coming up on their ass, though, Gen X. What are we? Are we Gen X?
No, we're millennials.
Oh,
yeah.
Shit.
Oh, yeah.
We got them.
U.S. population by share. I don't think that's quite accurate.
Yeah.
What website is this?
This is Google.
No, the Insider Intelligence.
Yeah, they're great. I'm just kidding. I don't know. But yeah, so fuck baby boomers, man.
Anyways, what I was trying to say, close that out.
Okay. Go back, you mean?
Yeah, go back. The point I was trying to make was there are way more baby boomers than there are millennials. There are actually so they all own homes. What are they going to do for the next 20 years? Die. Yeah. These homes are going to become vacant.
Gotcha.
Yeah, as new homes are being built. I mean, luckily the U.S. is afforded the fact that we do get I think we do see a lot of migrating immigration to the U.S.
Uh-huh.
But at the same time, it's still baby boomers are just from here on out. year after year going to drop off.
Yeah.
And so those homes are going to go back on the market,
Dang.
which is going to drive the price of homes.
Okay, so that
down.
could explain another aspect of trading. So let me go ahead and pull this up. I think that and we've already done a video on one indicator, which is called the Relative Strength Index, the RSI. But so down here at the bottom of the chart, this is once you learn candlesticks, what it's meaning, what it's saying. You can plug in additional pieces of information, and those are called indicators. So this indicator is called the Relative Strength Index. It basically just takes previous data from when the market is potentially ready to sell off and when the market is ready for people to buy in. Mm-hmm. So what Kenny's talking about there on the housing market, you're saying that once these baby boomers die off, we've got an influx of properties that are available for purchase. You would that would be represented on the RSI by being overbought.
Or, well, initially in the beginning, yes,
it would be overbought, which would cause the pricing to reverse down. Yeah. So once the market gets flooded with homes, the price of the homes are gonna become cheaper.
Yeah, exactly.
Yeah. Okay. Cool. So that's a little overview of an indicator, but let's keep pushing on. So we went over the history of candle charts. It started in Japan with the rice markets. At least there is some conspiracy about it. They say that that's not real. I've heard that from a couple people, that's just a narrative that they use. But hey, Google says it's true, and it doesn't matter if it's true or not. It works.
Yeah,
so that's the most important thing. So history of candlesticks. We went over what is a candle. We went over candlestick patterns. Okay, so on candlestick patterns, this is one that you are going to have to do a lot of research on your own on, because there's so many different patterns and so much knowledge on it that I wouldn't want to tell you that this pattern works and this pattern doesn't work. It's really just it's real subjective on how you take it. So inside of the PDF that we have in the link, I've outlined pages 14 through 53 is where you want to go for the candlestick patterns, and they show you a whole lot. But I'm going to go over some of them here with you real quick. And while I'm pulling this up, Kenny, do you want to tell them that they should probably subscribe to this channel?
Yeah, guys, like, comment, subscribe. Give us your feedback on what you'd like to see. We'd love to hear from you guys. You guys, a big part of the reason why we're here is to help support you and help you on your journey of building wealth and, fire, as they like to say.
Fire, baby.
Yeah.
And we know this episode isn't necessarily the most entertaining, but it is. I've been sick all week. You could probably hear it in my voice, but I've been sick.
I swear to God, if you get me sick.
I don't think I'm contagious anymore. I think it's just the stuffiness.
Yeah.
But I've been reading this Candlestick Bible quite a bit, and I'm telling you, as a trader, this thing has so much information in it for you. And I legitimately have friends like weekly hit me up saying, "Oh, I want to learn. I want to, is there any way you could teach me or whatever?" And I'm telling you, there's so much information when it comes to this. If you're coming to me and asking me for help, I will help anybody. But if you just read this Candlestick Bible, it will help you so much. Like you could read this in a week, and it will just give you such a better understanding of what the market is in general.
It'll give you clarity on
the subject.
Yeah, clarity.
So after you learn what a candlestick is and what it represents, then you need to start looking for patterns in these candles. So candlestick patterns are one of the most powerful trading concepts. They are simple, easy to identify, and very profitable setups. A research has confirmed that candlestick patterns have a high predictive value and can produce positive results. So it's you can do this day after day. I personally trade candlestick patterns for more than 20 years. I can't really switch to another method because I tried thousands of strategies and trading methods with no results. And that's true. A lot. I mean, the candlestick patterns are the best way to trade. I've talked about a common pattern on here, which is the doji. When you see the doji, go in for fun. I'm not going to introduce you to a holy grail. This trading system works, but prepared to take some losses. This is true. Losing is a part of this game. If you are looking for a 100% winning strategy, I highly recommend you stop trading and go look for another business. Candlestick patterns are the language of the market. Oh my God. I've said that before. Come on, Jesus. Candlestick patterns are the language of the market. Imagine you're living in a foreign country and you don't speak the language. Whoa. Imagine you don't know what it is. You're jumping on the market. You're in a Discord with somebody that you're paying, $700 to for some course that you don't understand.
Whoa, I feel attacked.
No, but no, it's dive in and figure this stuff out because it really does help. But if you know how to read candlestick patterns the right way, you'll be able to understand these patterns and tell about the market dynamics and the trader's behavior. Okay, so let's look at some of the patterns that they're talking about. This is a very easy one. So a bearish engulfing. Bearish engulfing is one of the most important candlestick patterns. This candlestick pattern consists of two bodies. The first body is smaller than the second one. In other words, the second body engulfs the previous one. Then here we'll have this illustration below for you. So this is a bearish engulfing bar. So you have the first bar here, which is much smaller. Then you have the second bar that comes up and just eats the entire fucking bar.
So it's like, we're buying.
Yeah.
We're buying.
Like,
oh, yeah, we're kind of buying.
Like this right here.
And then, boom.
Exactly.
No, we're fucking selling.
So if you would have waited, like in this case right here. So this is the TQQQ. If you would have on June 9th, if you would have waited for your trade, you see this bar develop. You wait June 10th. You wait the whole freaking day. You don't do nothing. You want to see where it closes at. After you see that it closes a completely bullish or completely bearish engulfing candle, or it engulfs the entire previous lows of the day before, you could then place your trade, predicting that you're going to have bearish activity the following day because you've already had a bearish engulfing. You could have placed your trade here and pushed all the way back down and made a shit ton of money.
I mean, looking at that chart right now, you see the engulfing bull right there.
Yeah.
I mean, if you listened to that, just that pattern alone, you got a trade going up.
Yep.
Right there. And then let's say it consolidates, and then the minute you close below that, you close out, bam, and then engulfs again, and it's currently looks like it's heading back up again.
Yeah, you could have easily waited for the you could have seen the doji, waited for the bullish engulfing. Then you could have, once it went sideways and seen that red doji, you could have sold off, which would be like the easiest setup ever. You trade off of a bullish engulfing, you exit your trade off of a doji, and then you enter in a bearish trade off of a bearish engulfing, and you're just flipping your trades constantly.
Yeah,
that would have been beautiful. Same thing here. You have a doji, which that one's a little, that's why this doesn't work 100%, but you have the doji here. You have like a pin bar kind of setup, and then you have a bearish engulfing. You could have did the same thing. And then as soon as you break back into your channel, which those are another thing we're going to go over, price structures. But yeah, see, it doesn't have to be extremely complicated. In fact, when I trade and I kind of strip all these things away and I just go off of extremely basic information, I usually profit more. It just seems to work better for me. With all these indicators and oscillators and price structures, I tend to overanalyze things a bit and not see the full picture. That is candlestick patterns. That's pages 14 through 53 of the Candlestick Trading Bible. And that's just one example. Like, I mean, this, like I said, pages 14 through 54. So it's an extreme amount of candlestick patterns that you can choose. You just kind, it's kind of like a different bait. You know, you're going fishing, you choose your favorite bait, and you wait for the perfect conditions for that bait to work. You know, if you're a fisherman, windy day is a spinner bait, a calm day is a buzz bait.
Mm-hmm.
Same thing. Bearish engulfing bar. Again, that shows you a perfect pattern here. You had a small candle with a large candle that eats everything up. It goes down in price. And then you can flip-flop it for a bullish, which I'm sure is the next one. So you got bullish engulfing bars. You got doji candlesticks. Let's see what they say about dojis real quick. Doji is one of the most important Japanese candlestick patterns. When this candle forms, it tells us that the market opens and closes at the same price, which means there is equally an indecision between buyers and sellers. There is no one in control of the market. See example below. Yeah, it's the line of scrimmage. It's tug of war. Nobody knows who's going to win. So again, boom, doji candlestick. You have that engulfing, and then you can pretty much bet that it's going to be a continuation of what that candle is doing. So you go down the list. There's a million different, there's the dragonfly doji. There's the gravestone doji. There's so many. So I definitely encourage you. Like, I cannot encourage you enough. This whole video is trying to push you towards looking at the PDF that we have down in the link and to really study this Japanese candlestick Bible and become a better trader. And this works on everything that's put on a chart, any market. It works all the same.
I mean, in short, learning candlesticks and learning patterns, all it's doing is it's showing you the momentum.
Yep.
That's all. Like the gravestone doji or what was the other doji are good examples of
Dragonfly.
Dragonfly.
Yep.
Because it either ran up to a certain price point and then got eight back up, and you have to look at the direction which was the direction going last.
Yep.
It was the secondary action that you're looking for, not the first action.
For sure.
That's why your wicks are also so important, because if your wicks are long, that's when you're gonna. It's showing you the secondary action within that time frame.
Most def.
Most
def, dog. So, all right. So we went over candlestick patterns. That's going to be, and I kind of recommend that you do it in this fashion, that you learn what the candlestick bodies and wicks mean. You look for corresponding candlestick patterns. And then you move on to, it's debatable. You could look at price structure first, which is like support, resistance, supply, demand, those kind of things. Or you could start with candlestick patterns. But I think candlestick patterns are more repeatable necessarily than price structure. So you could probably trade without price structure and just trade off of candlestick patterns a little easier. So I would say learn what your candles mean, and then look for corresponding candlestick patterns. But next, we're going to talk about price structure. So this is support, resistance, supply, demand, all those kind of things. So we have went over this in the past when we did a chart of Bitcoin. We kind of talked about supply and demand and support and resistance. But I have a very, very basic one here, and then we'll add a little bit to it just so you can see. So this right here, price structure. So we have a downward trend. I used a very simple tool on TradingView called a parallel channel. So you just click that parallel channel bar. You go to the very top of the movement that you see, all the way down to the bottom. And I'll delete this and do it again just to show you how easy it is. So we'll go parallel channel. Click my top here. Pull it down. Just you wanna put that line through where the most confluence is happening. So where you're getting the most touches. So you do that, and you pull it down to there, and then boom, you have your structure. You could argue that, they say that if you put 10 traders in a room and tell them to put support and resistance, there's going to be 10 different support and resistances. So, again, it is subjective, but I'm right on this. So just saying. So you can see here that we have a very difficult time breaking this price structure. If we do break, we have a full-on retrace back down to it, and it seems to be bottoming out right down here. And this is just following a downward trend. That's all it is. It is moving up and down, but it's staying inside of this channel. So that's the structure of the pricing. So if it does pop up, if it does break the top of your channel, there's a great chance that you can, take a long trade and wait until you have some kind of candlestick that indicates that we're going to be returning back down to our price structure, our channel.
Like that doji.
Exactly. So you'd have something like this. You'd have a bullish engulfing or a bearish engulfing like we have right here. And then you would, I would probably set my I'd buy some shorts and ride it back down to that 50% zone inside of your trading channel. You have a lot better probability with it returning to the same point that it has in the past. That's really all it is. And then just for my sake, I want to turn the EMAs on to see if it stopped out. Yep, stopped out right at the 200. So we'll talk about the EMAs in just a moment. But so that is, you don't have to get super complicated with it. You don't have to spend a whole lot of time. You want to look at the areas on the chart that are touching the most, and you want to look. You want to look for confluence. So if it's look at how many times it's touched the top, look how many times it's touched the bottom, and just put your lines on where it touches the most. That's it. Don't overthink it.
Yep.
So you could really right there, if you knew about what candlesticks mean, you grab a candlestick pattern formation that you feel comfortable with, and then you lay on some price structure. You could really have a trading plan right there. So when everything hits your check mark, you got a beautiful candle, you've got a beautiful pattern set up, and you have your structure to know where it potentially is going to be headed back to. That's a trading plan. That's as pro as it gets, really. I'm trying to think here. I don't want to miss anything on the price structure. Now, this is a very simple, way to look at it. You can also, I usually do, I forgot what Brenny called it. I think it's static and non-static pricing structures. But you could see, let's see here. That's white. Let's go black. So you have linear and static or something like that. Basically horizontal and vertical. So you have a support line here at 62. 62 was the bottom there. 62 was the rejection there, and it was the rejection there. So 62 seems to be a very strong resistance level. So you could have really bet that once it broke out of this downward trend and we rejected at this level, you could have betted that we were headed back down into our downward trend. Yeah. So that's just another layer. There's all kind of pricing structures that you can look at. This is my basic setup right here. I do support and resistance, and I do the trend, and then I pair it with an indicator, which we'll go over in just a moment. Okay, so after you have understood candles, understood candlestick patterns, now you've understood pricing structure, it is time to get into indicators. Indicators are predictive, usually mathematical. I wouldn't call it an algorithm, but it kind of is. It takes data from the past history of the price and calculates it into like the most common.
It kind of draws a line in the sand.
Yeah,
in a weird and it lets you know. I mean, a lot of this is just the biggest thing I've kind of learned as I've gone through the rabbit hole is a lot of trading is based off of and you can call me dumb for saying this. So, it kind of feels like it's based off of physics, like in the sense of if you break certain levels of your EMA are going to be a lot easier to break through.
Oh yeah, yeah.
And like it almost feels like the market's pull and push and pull off these indicators. I mean, it's always good to like learn your indicators because in reality, that's what Wall Street is doing too. You know, that's what every successful trader is doing. They're looking at candlesticks. They're looking at patterns. They're looking at all these different things. And if you can learn the language that they've obviously learned,
exactly,
then you can be profitable in this market.
Yep.
That's, you know, and they use indicators and to make decisions on whether they're going to buy, hold, or sell.
Most definitely.
Know? And so
and this Candlestick Bible tells you all about that when it comes to market psychology and why people will buy in and sell out at different times. So
I mean, why is it that every single time you're like a majority of people FOMO in at the top? You know, it's all like, you know, it's all psychology
for sure.
And
well, it's usually, I mean, for me at least, when I do it, like they're missing a part of the puzzle. So like here we've broke the pricing structure, and you're thinking, oh my God, it just broke. We're going to the moon, but you're not realizing that how many times has it broke and stopped at this 62 line. You know what I'm saying? So if you don't have your pricing level set, it can become difficult to see the full picture of things. Yeah. You know, because every time we've got on the TQQQ, you can see, you know, as far back as you want to go, that 62 has been so pivotal. If it can break 62, dude, we're going to the moon. But how often has it been able to break it? Only one time in the last, you know, year. Yep. It's been able to break it one time. And so what's the probability of you actually being able to break it? Not very great. Yeah. You know, if anything, they say everything works in 3. So you would want it to break 62 2 more times before you could really think, okay, we're really going to go to the moon.
Oh, I see.
Yeah. So we had the so that's the FOMO right there. You know, you've broke out of the pricing structure. We've got 3 or 4 really good days. Mm-hmm. So then you have, I bet you had like a huge candle right before. Yeah. So you have a huge candle right before you hit 62, and that's that psychology. It goes, oh man, if we can break 62, everybody's trying to break that 62. As soon as we touch it, the smart money starts selling because they know there's no way. Market sentiment is not beautiful. We're not going to be breaking 62. Yep. So as soon as people start to go in, you think that's why when you purchase an asset, it's almost like the second you sell it, it pumps. The second you buy it, it drops. It's because you're buying in at the wrong time. You're legitimately FOMOing in.
It's kind of like you have to figure out how to be the first one to say no. Yeah. And you have to be the first one to figure out how to say yes.
Exactly.
You know?
Yeah. You got to it's never comfortable. Every really big win I've ever had has been pretty uncomfortable. Yeah. Like prior to me being extremely profitable, you know, I tend to, you know, when I day trade, I tend to just go with the flow of momentum. So I'm not trying to make, you know, a lot of this shit doesn't even matter when I'm day trading. I just want to see, oh, shit's tanking. All right, let's tank with it. Yeah. You know, let's short with it. Oh, shit's pumping. Let's go long with it. Let's ride this wave. I don't want to be predicting the top and bottom. I just want to, you know, jump on the wave for 30, 40 minutes.
Do you think it's so you say I guess I have a question. Do you think because it seems like you can see all the signals of, okay, we have a momentum here. Mm-hmm. I can ride this down or I can ride this up. Yeah. do you think it's possible to have that skill set and also have the skill set of noticing the shift in momentum?
Yeah, for sure.
Yeah.
Yeah, and
or
it
do you think
takes.
that's something you kind of have to pick one or the other? You know what I'm saying?
Yeah. No, like, are you a bull or are you a bear? Can you be both?
No, I mean, like, for example, can you really see the turn? Like,
Oh yeah.
Can you catch the bottom or can you catch the top?
Yeah. You can.
get that.
You
good?
can. Yeah.
Okay.
I mean, most of the time I don't usually, like, I'll admit I don't usually sell at the top, but I usually
Like 90% there.
No. I leave a lot of money on the table when it comes to trades because I let them rip early. Like, as soon as I start seeing momentum break, I'm out.
Yeah.
Because I'm looking for a 15-minute trade.
But how good do you believe somebody can get?
Oh, dude, they can get it. They can get, because I can buy the bottom usually. I usually can see right as that momentum shifting where it's going to go in my direction.
Mm-hmm.
I usually enter perfect.
Okay.
I can enter a trade beautiful. It's my exits that are much more difficult.
Which would make sense because at that point you're putting your neck out there.
For sure. Yeah.
So that's where the emotions.
That's all it is for me.
Come in.
That's it.
And then kind of create self-doubt.
Indeed. Yeah, because I'm like, I do not want to give this money back.
Yeah.
That's where it falls, that's where it falls. Like this week, for instance, I had on this one, I had a $25 strike price that I had bought call option. I was betting that the price was going up on Monday. So let's see here. I don't know the dates, but it ended the week at over $27. So that was $2 over my strike price, which is very good on TQQQ. That would have been like 200% on my investment. But I actually I'll be completely honest. I sold my call options on Thursday for a very minimal gain. I think like 20% profit on my investment. And I actually bet that the market was going to go in the opposite direction on Friday. I bet that the market was going to go down instead of up. So I lost money on Friday. It was very freaking annoying because I was really sure that with the sentiment that we had from the Fed that things were gonna go down. Because that was the week that they rose
75 basis points.
Yeah. So it was like it didn't make fucking sense. Like, I really thought things were gonna tank. Which is why I exited my long trade and got into a short trade. Short meaning that you're betting that the market's going down. And again, that it goes over that in the book.
I heard today for the first time. I knew I was gonna start hearing it. 100 basis points.
Oh shit.
Yeah, I heard that today on forget which podcast, but I heard today 100 basis points.
God damn.
Which I had a feeling because, I mean, every single time they're like, when it's 25, people start saying 50. When it's 50, 75.
Right.
Yeah. And then a lot of people are saying if they do 1%, I think the markets will just be like,
fuck. They're going to be like,
doom.
Yeah. Oh, God.
Yeah.
Dude, but that's gonna be the narrative. That's gonna be what people are gonna be afraid of.
Yeah, I mean, it really does seem like they're trying to create a slow burn, and I don't know.
A soft landing.
It's a soft landing, but it's almost like these like I don't know, Citadel and BlackRock. It's almost like, guys, just take your money out now. Like, let's be done with this slow burn and let's just
let it fall, baby.
But I'm also saying that because I do, but I don't have a lot of investable assets.
Yeah.
I'm sitting on.
You do have an active trade out right now.
Are you talking about Bitcoin?
No.
In my favor,
right.
In the favor of it tanking. Yeah,
right.
Because I have a short position on TQQQ.
Yeah.
And
Not investment advice, by the way.
No.
None of this is investment advice.
No,
We're not professionals in any way. But
You can copy my trades if you want to lose money.
Don't be a dummy. 100 basis points is coming for sure.
Yeah, but
tell your dad.
It's just kind of, I don't know. Once you get I don't know. Now that I'm aware and look out for the news on all these things, it's like, it's not shocking anymore. It's just like, okay.
I had the thought the other day.
It's just games. I
know. I feel the same way. I had the thought the other day that does any of this really matter, or do we just know now? Like, do we just follow this news? So now, we see like, oh my God, things are going to be horrible. When before, all this same shit has been happening forever. And we're like, we're just floating through life like, oh, everything's cool, everything will work out. Yeah. And it does.
Human nature always says, like, we're always freaking out. Like, for example, a wife splitting from a husband and, raising 2 kids on their own.
Yeah.
They're going to figure it out.
Right.
Like, we're going to figure this out. It's just, I think the advantage of paying attention puts you one step ahead of just getting on the roller coaster.
Yeah, like the worried mom that goes and gets 2 jobs is probably better positioned in her transition of leaving her husband than the one mom that's like, oh no,
I'm just done. I'm getting out of here.
Yeah,
we're gonna go live in the car.
Yeah, yeah, for
stuff
sure,
like that.
Yeah, you're just this is learning about this stuff is just potentially positioning yourself in a better area during crisis.
Yeah, because like for example, like when I bought the Bitcoin, I just bought it flat out, and that was a dumb thing to do. Looking back on it, I didn't sell it because I'm not going to sell it.
Hell yeah!
But I should have dollar cost averaged in. I should have done every week, just buy a little bit, and I may not have ended up with a whole coin if it was rallying up, but if it rallied down, which it did, I could have ended up with more than just one coin.
Jeez, you could have got 2. You could
Shut
have got 2. You could have got 2. But no, that's great, dude. It just teaches you. It teaches you.
It teaches you. Yeah.
I mean, Ethereum taught you.
Hey, at least I didn't buy at the top of Bitcoin.
Yeah, hell no, you didn't. Man. And you didn't buy at the top of Ethereum.
I did.
You just bought at today's top of Ethereum.
Oh, okay. You're saying.
You gotta. It's all cyclical, man.
Yeah.
Okay, so now you've got your understanding of your candlesticks. You got your understanding of your candlesticks pattern. You know about support and resistance. You know about trend lines, all this kind of stuff. What else do you do? Is there another piece that we're missing? What do you think? Is there?
Risk management.
There's one more. There's indicators.
Oh, indicators.
I did touch on that a little bit.
Yeah.
Let me tell you my favorite indicator. My favorite indicator is the EMAs, and I've went over this on another video. So please, look back on our video logs. I've got RSI, which is the relative strength index that we told you about. When old people die, houses become better.
What?
Then I got EMAs, which is exponential moving averages. So I'm going to flip it live here on the chart. Right now, you're just looking at the overall chart. Now in 3, 2, 1, boom. You've got indicators on. You've got the exponential moving averages. So I have chosen a very basic one. It is the 20, 50, 100, and 200, which is these 4 lines here. That just tells it tells you the average price over the last 20 days, 50 days, 100 days, and 200 days. That's all it is. Most traders look at the 20-day moving average for intraday movement. So that's during the day. If it can cross that 20, you say you're bullish on the asset. If it cannot cross that 20-day moving average, you're bearish on the asset, which when we look here, we did have a rally, but we did not cross that 20-day EMA. We actually got stopped out at the 20-day EMA. So you see this wick here that pushes above it, but it could not hold above the 20-day EMA. We haven't been able to break the 20-day in a long time. So you still have, bullish sentiment, bearish sentiment out.
What is that? April 21st when it did break it.
We broke it.
Oh,
March 18th is when we broke it, and we had a huge rally all the way up to our 62 support zone.
And like also that is at the 100-day moving average at the top.
The 200. The dark blue. And the 200 is the macro. So that's the large view of the market is the 200-day moving average. That's the one that
it totally makes sense why it reversed back down.
Exactly.
And why it dropped back down.
And it also makes sense at why that mark is so important. I would be willing to bet that, let's see. Yeah. So when we started our upward trajectory, back in 2021 in March, which is a year ago from where we're at.
Yeah. A year and 2 months.
Yeah. So that's where we bounced off of our 200. So the 200 macro is, you could have took a year-long option call once it bounced off of that 200 and you would have been stupid profitable and just waited till it touched back on the 200. And a lot of people do that. That's called golden crosses and death crosses is when you have convergence of the 20 and the 200, like right here. Once the 20 crosses that 200, it's, the bears are back in town, baby. It's time to short everything. That's what people think. And such a beautiful thing there. You could have just went off the 62 trend or resistance, and you could have waited for the cross and just shorted bought out a year, and it would have been your most profitable trade you've ever fucking took. That's for sure. So yeah, the reality is you have to develop a plan that works for you, and you got to stick to it. Because even throughout the day, like right here, you could have took a very long put option and got scared once we started crossing that 20, but the 20 doesn't mean anything if we're not over the 200. The 200 doesn't mean anything unless we can cross that 62.
Yeah, if it doesn't flip.
Yeah, so you have your checkpoints and wait till all the checkpoints get hit and then take your trade. Very simple. But yeah, God dang it. The EMAs are the exponential moving averages that tell you the average price over a specific set of days.
I mean, the fact that zoom in on where that maybe April 2nd. Oh no, not 21, 22 this year.
Let's go here. April 2nd. Where are we at? I missed my April.
To the right, right there.
Okay. Oh, yeah.
And zoom in right there.
Uh-huh.
And you see where the 20 days kind of bumping up to the yellow?
Mm-hmm.
So the minute you see, I guess I'm looking at it now, I'm just like, man, that was such a beautiful indicator that the price was just going to drop.
Yeah.
The minute it dropped below that 20.
Exactly.
Because then that momentum's going to get just pulled further away from the 20. What's the yellow? 50?
50?
Yeah, that momentum's going to pull away from that 50-day.
Right.
Dang. Sorry.
No, it's beautiful.
I'm being enlightened.
Yeah.
Right now.
And then because you have your trend line, your parallel channel, you can really bet on where it's going to go down to.
Yeah.
It's going to go down to the same area it went down to last time. This 50% of your trend line, and it's doing the same thing. But we don't. It's not pretty yet. We need to cross the 20 and hold. We need to cross our channel and hold, and then you can hopefully make a case that we're going to push up towards the 200.
Hopefully not.
Yeah. Well, I mean, I don't think the case is made yet.
Yeah. No.
This looks like what our buddy Crypto Profit 420 calls a faucet drop pattern, where you have almost like a little backwards J. And the backwards J is honestly, it's just to retest that EMA.
Yeah.
That's all it is. It jumps up to retest the EMA. If it can't hold the test, then we're going to have an immediate waterfall type situation. And we could, be willing to bet that it's going to fall back down to our 50% of our parallel channel and then potentially down to the bottom, which, is like $6 on the TQQQ.
I'm gonna cut this out. I'm gonna make so much money.
Yeah, no, don't cut it out. But
Not
yeah,
financial advice.
not for NFA. Another thing to really think about while setting up your trading plan is what type of market would you like to trade in? There's there's all kind of markets. There's stocks, there's the bond market, there's options, there's forex, crypto. Some people believe that there's NFT markets. Some
Whoa.
people don't.
Whoa. NFT markets.
Yeah. It's not for you.
Nah, I think that's a collector's game. It's
Yeah.
not. It's not a mark. I don't know.
That's how I play it.
It's such a. I mean, it's a small niche. It's a really small niche that I think it's a collector's game. It's not a. I mean, Gary Vee's not a fucking trader.
No.
I mean, and he's big into NFTs.
Yeah.
And he understands them, and he understands the value behind it because he's a collector. You know?
Yeah. But a very good the way to figure out if you need to what market you need to trade on is see what time of day. I know this sounds really simple, but see what time of day the market that is active. What are you an early bird? Do you like to wake up super early in the morning and you feel really productive early morning? Jump on the stock market. It opens up.
What's going on? I'm in.
Jesus Christ, Brenny, put some compression on your voice. If you do feel very productive early in the morning, Kenny wakes up early. I don't love waking up early, but I have to. Then trade the stock market. If you like to stay up extremely late, trade the crypto market, trade the forex market while other countries are waking up. 2 a.m. is Europe, and you can trade forex over there, and that's when that market is really active. But find a market that kind of fits your lifestyle, fits where you're most active in, and learn it and go for it. So now that that's out the way, I've got Pastor Brenny on the line here. He's going to come on and he's going to talk to us a little bit about risk management. Very good video. If you don't know about risk management, you're a hoe.
In the world's best program of all time, Paint. Alright, what's going on? I'm in the world's best program of all time, Paint. So, risk management is basically determining how you're going to deal with the absolute worst case scenario. It's planning for the worst case scenario so that if the worst case scenario happens, it's not going to hurt your performance. So, let's say that you're starting out with $10,000 in capital. Now, number one is, in the worst case scenario, let's say that I have continuous losses, they're big losses, they absolutely suck. What's the most amount of this $10,000 I can afford? And most people have this idea that more risk is better. If I risk more, I've got bigger balls and I can make more money and I'm a better trader. No, it's not the case. The number is different for every person. So, and in my experience working with clients, generally I find the number that people are comfortable with before they start becoming emotional and making bad decisions is around about 10 to 15%. Once they cross that mark, in general, they start to go, oh my God, is it failing? Is my strategy suck? Do I need to change it? What am I doing wrong? So let's just say the number is 10%. Now, for some people, they legitimately can handle 25, 33, or even 50%. But most people, I find it's around 10% of their entire capital that they can stand to lose. So that's $1,000. Then step 2 is you need to determine what the maximum amount you can lose is based on your strategy. So let's say that you do a back test. You back test your strategy for 100 trades, and now you have your strategy win rate, you have your average win, your average loss, and you should have your biggest win and your biggest loss. So let's say you back test it for 100 trades. That gives you a win percentage of 75%, and that's really, really high. 75% win rate. Now, based on a 75% win rate, that means that you're going to have a maximum number of consecutive losses in the worst case scenario. the maximum losses in a row you can possibly handle is going to be around 6 trades in a row. And that's leaning more towards the high end with a 75% win rate. So in the very, very worst case scenario, just everything is shit. 6 trades lost in a row. 6 trades. Hope that's readable. 6 trades. And so now what you do is 6 trades multiplied by your biggest loss. Now let's say that your biggest loss over your 100 trade back test was $200. So 6 times $200 equals $1,200. Now $1,200 is bigger than this number here. So what that means is you need to reduce risk. So step 5, reduce risk. Now you could do this by reducing position size. Let's say that during those 100 back-tested trades, you were buying 5 shares every single trade of whatever instrument that you were trading. Maybe drop it down to 4 shares. That's going to be a 20% reduction, and so your maximum loss would be reduced by 20%, which is $240, and now you would be around $960. Awesome, that's below 1,000. You are now good to go because you calculated your risk, and now I'm just drawing boxes. So basically, you want to know how much you can tolerate to lose mentally, and it's important that you be honest with this number, because if you try to be, I've got bigger balls than you and I can risk more than you, what's going to happen is you're going to lose more than you can handle. You're going to get emotional. You're going to start trading based on those emotions. That can lead to greed, that can lead to revenge, that can lead to regret, and that's going to lead to even more bad trades, even bigger losses, even bigger emotions, and then you're on like the death spiral of terrible trades. So the important thing is define your risk first, make sure it's something you can actually handle, and then go ahead, backtest your trades, find out your maximum consecutive losses, and figure out what your actual risk is in the absolute worst case scenario. And if your worst case scenario is completely good, you're like, hell yeah, I can handle that worst case scenario and I'll be completely fine, then you have good risk management and you're going to live to trade as long as you want to trade, and then you're going to be able to make money because in the worst case scenario, you know you're good. So now if you're in a regular case scenario or a good case scenario, you're going to be amazed at the results. So yeah, hopefully that covers the topic. Look at that. That's almost bang on 5 minutes. Cool.
Perfect, Bernie. Thank you so much for that explanation of risk management. He does such a good job.
Yeah, he does. He does do a really
even though he
good
was
job.
using paint. I thought paint was dead.
Apparently not.
Apparently not. Maybe not in Australia. Nothing dies in Australia except Steve Irwin. R.I.P.
Rip.
I love Steve Irwin, man.
Yeah. Have you seen his son?
Yeah, he's hot.
What? Okay. No, I mean like in the sense of he acts just like him.
Yeah, and that's hot. You don't think his son's hot?
He's like 15.
No, he's not.
Oh, I mean, not anymore.
No,
but when you saw him on, I mean, I don't know when you saw him.
I saw him like last week on. I watch him on TikTok, and you should watch us on TikTok at 3 Point Charts.
Yeah.
What's his son's name? Kid Irwin. I gotta know how old my crush is. Steve Irwin's son. Yeah, dude. He's Robert. What is that? Clarence. I'm an idiot.
Irwin.
He's years active. 2004. Yeah.
Oh, okay. So he's 18.
Yeah. He's hot. He's hot, dude.
Is he 18 though?
I don't know.
Wait, did it say November? He's 17.
No, he's an adult. Years active. Probably years active as a person.
Born.
Hold on. What was his name?
Robert Irwin. Age.
Let's see. He's 18.
18.
He's hot. He's fucking hot, dude. No, he's actually a really nice guy. I like every time I've ever seen a video of him, he's like you could tell you could tell you could hang with him.
Yeah,
he's cool. Yeah, I saw a video on TikTok the other day where a girl was like, "Hey, reply to my DM." He was like, or she asked if she could get his number, and he was like, "Well, the best way to do it is, send a DM to, my Instagram." And she's like, "I already did yesterday." He's like, "Oh, okay. Well, what's your name?" And he clearly wanted to hook up with her. He was like, I will reach back out to you tonight.
That's funny.
Go
get it. Go get it.
Go get it, big dog.
Come and trade with me. I got all the profit.